Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, Merry Christmas. So to not be too annoying to you with these reports and videos and markets, I'm just trying to keep it really fast. So actually today, as usual, we have prepared the weekly report. The recent statistics that we've got on Thursday and Friday was mostly dollar supportive, and that has triggered the downward action on the gold. As you can see, this is the revision of the gross domestic product, as you know, some consumer spending data, PCE index, inflation index. So all this stuff was a bit more or less supportive to the dollar, and well, that has triggered downward action, and mostly this stands in favor with our report and with our analysis that we actually were waiting for this action where it finally will start. Speaking on some fundamental events, so we have taken a look at the few economical moments. The major one is that actually not just we, but also other analysis across the board start talking about the shortage of the Fed Reserve to keep tightening policy. So more and more analysis start talking about the Fed capitulation. The terms differ. So somebody agrees with our opinion that it should be somewhere in March and April. Others talk that might last through the 2023, but a lot of analysis of the big banks, such as Namuru, for example, also talked about the insufficiency of the reserve that Fed has and low liquidity on the treasury market. It's just to keep the tightening policy in the way that they do, and actually especially on the background of the tight range. That's what about the economical background. On the political background, we think that a really epic event has happened. This is agreement between Russia and India to use their own tankers fleet to transfer and making the supply of the crude oil. This is a really epic turn in global politics. It's just because the first time in the modern history when the delivery and pricing of such a commodity like the crude oil stands independently from any Western authorities. So no insurance companies, no banks, no exchanges for the pricing of the crude oil. Actually, no tankers, no fleet. So all this going behind of the Western companies directly between Russia and India, and this is a really big precedent that somehow was not well covered in the media, but this is really historical moment, and that definitely will have the really big consequences for the overall global system. Also, we have taken a look at some other issues that will have the big resonance in the nearest future, but to keep it short, you could read if you would like to. Some interesting moments exist in the report, but to keep it short, the entropy in the world is rising. So the big shifts usually leads to the big mess, and gold remains really the hard rock safe haven in the current circumstances. We're still calling to invest in the long term in the physical gold coins, bullions, whatever you could find, without relation to the paper gold. I mean, such as metal-related accounts, such as the futures, although they also could be used, but as you understand, they are not deliverable, and probably, well, this is more risk just to dealing with them rather than just to buy coins and keep it in home or somewhere in the safe. So speaking on the technical side, here we also do not have a big shift. So on Friday, we've got just minor pullback that we have discussed, and mostly stands everything according to our expectation. We've got two grubbers that suggest taking out of these lows. We have cross-market analysis on the dollar index that also suggests some upward action on the gold on the dollar, which means downside continuation on the gold. There's more pressure on the gold, and everything goes just perfect. So if you have missed a chance to take a position on the top, and if you do not take the position on the retracement that we discussed, so take a look. That is what we have prepared on Friday morning. If you remember, we said about this ABCD retracement, and it tells that this will be the first level around 18 even, where you could try to take the short position. So if you have missed with this entry as well, as you can see, reaction in general stands good. You could get the second chance. So take a look on this recent drop. Market now shows the minor pullback, and minor grabber has been formed here. So that's opportunity for a second entry with this level. Those who have taken position here, or especially here, now just could move stops to the break even and see what will happen next. Because currently market shows really healthy downside action. Hopefully that will become the trade that we are watching for. On a monthly time frame, I mean the bread and butter. Not only on the gold, but hopefully it will happen across the board. On the yen, Great British Pound, dollar index, euro, and probably other markets where you could find it. So that's, guys, actually all that I would like to say right now. Just do not want to bother you anymore, and well, enjoy the Christmas.